Well, back to looking at that new coronavirus now, and the economy has also suffered from it, of course, with rescue packages announced by many governments. In the US, the White House has announced an $850 billion sum that promises to provide relief for small businesses, to the airline industry, and also includes provisions to send checks directly to citizens to help them cope. Well, stocks on Wall Street rallied on the back of that news, but the positivity was not picked up across the Asian markets as we saw in trading on this Wednesday. Well, in our efforts to stem the spread of this new virus, we're keeping as many people outside of the office as possible and are working from their homes, including business editor Yuka Royer. Yuka, looking at the latest figures on the main indexes, notably we were flashing them up there from Asia, it looks like the financial stimulus measures aren't enough to steady global markets.
Well, I mean, it's there's a lot of unknowns in the markets right now, and one stimulus measure from another is just not being enough to calm markets across the globe. If you look at Asian figures, we just saw Hong Kong dropping as much as 4%, and Tokyo's Nikkei down 1.7%. And now this as the Japanese government following on from that massive stimulus measure announcement of the stimulus measure from the US President Donald Trump. Japan is also mulling its own stimulus measures, including cash handouts to people. The United Kingdom is also launching a £330 billion lifeline of loan guarantees and a further tax cuts and so forth. It does appear, though, that the government's fiscal stimulus measures are having a greater positive impact than earlier measures announced by global central banks. Now, rate cuts and bond buying programs announced by the ECB, the US Federal Reserve, they just did not cheer markets at all. And now, at least on Wall Street last night, we saw shares rallying 6%. But then you have to put that into context. That came just one day after shares across the board plunged 12%. So, as I said, a lot of unknowns, and the big question remains is that are all these government promises and measures going to be enough to avoid a global recession? And the answer arguably could be not enough, really.
Indeed, and Yuka, of course, European stock markets are now open and they have all gone into the red upon opening. London down almost 4%. But in general, according to the latest figures, they're all going down between 2 and 3%. Indeed, as cities go into lockdown, Yuka, the pandemic weighing, of course, on consumer appetite, a clear direct impact. And one of the industries that's been picked up on this Wednesday is the car market.
That's right. The European Car Manufacturers Association has just released its February figures, which showed that across the European Union, car sales went down by 7.4%. Now, that's continuing on from negative figures.
Yuka, we're going to have to, sorry to cut you off, we're going to have to leave it there, but thanks.